What's going on, apes? My name is Tyler. Welcome back to the channel for another very important AMC update video. And in this video, I want to focus on three very important things. Look at the charts and try to predict what is going to happen next, as we do know, or at least in my mind, we are going through a bit of a gamma squeeze. So I want to talk about exactly what a gamma squeeze is, because I think AMC overall, the gamma squeeze from June 1st through June 3rd, when we went from about $15 to $77, almost $80 per share, that really messed up a lot of people's idea of a gamma squeeze. So I want to go through exactly what is going on, what we can expect from this gamma squeeze, because we are 100% going through a gamma squeeze. If you don't think we are, then you should really read up on what a gamma squeeze is in stocks that are not AMC, because AMC was a very rare case of a gamma squeeze going from, like I said, $15 to almost $80. Typically, when you see a gamma squeeze in other stocks, you will see price action that is very similar to this. So we're going to go over what I expect to come out of this gamma squeeze. We are also going to go over the fact of the share utilization is going down, and a lot of people do believe you want to see the share utilization going up, and there's pros and cons to both of this. So we're going to go over that, as well as just the Ortex data, obviously the gamma squeeze, how the option chain does look, and the technical analysis. So with that being said, guys, drop the like on the video if you want to see this gamma squeeze effect come into full effect by the end of this week. Thursday and Friday are going to be the most important days because we are typically red in AMC stock. Also, make sure to comment down below, subscribe to the channel, and turn on that notification bell so you'll be notified when these videos are uploaded. So, guys, let's get into the technical analysis a little bit, and this is something I've been calling out in every single video. So if you have been watching these videos for quite some time, you already know what I'm going to say, but we firmly broke out past our 50-day moving average, which was $35.59. So this does indicate to me we are likely to break out of our next resistance level, or at least retest this resistance level at $40 per share. If we do come down for whatever reason, it's possible we come down tomorrow, since we have had two very strong days, going up about 10%, even closer to 11% throughout the last two trading days, obviously Monday and today. So I would expect to retest this $40 resistance level. If we can break above that, obviously that will become a solid support level. Then we're going to have to watch out for our next level, which is going to be $50 per share. So that's basically what I expect as far as the technicals are concerned. A continued breakout looks very likely here, but don't be fooled. We can go down tomorrow, and there's absolutely nothing to worry about. When it does come down to the whole gamma squeeze effect, we're going to talk about that more in detail and why you shouldn't really worry if we do go down tomorrow. I'm not a fortune teller. I don't know if we're going to, but you should not be too concerned. Now, for the day, we did see that elevated volume yet again, pretty much matching yesterday's volume. Yesterday's volume was 86.3 million for volume. Today, 86.2 million for volume. So that is quite weird in and of itself. Nothing too crazy there. That can happen, but we are seeing that increased volume, which does lead me to believe as well that we are seeing a lot of activity happening on the option chain. But watch to see if this volume does continue to pick up. As we can see, we've had green days the last 1, 2, 3, 4 trading days, so definitely a good sign right here as far as the technicals are concerned. Now let's get into the gamma squeeze situation. And like I said in the beginning of the video, a lot of people are really misconstrued of what a gamma squeeze is when it comes down to the actual price action. If you see a stock that's not AMC that is just going up a lot, and you would see this exact same action on the option chain, the contracts running into the money, there is no news on that company, you would assume it's a gamma squeeze. Let's say the stock's up 5 to 10%. That is a typical gamma squeeze. Even 20%. That is pretty typical. When you start to get even bigger moves than that, that is atypical. AMC is an atypical stock. You can see atypical moves, which we have seen. But to say this is not a gamma squeeze is 100% not correct. This is a gamma squeeze. There is no particular news that is coming out besides the 13F filings, which are indicating to us institutional investors have bought about 5% more of the float since these filings did start to really come out throughout the last week or two. So definitely a lot of bullish behavior that can lead to an increase in buying power as well, because big money is placing their bets, their bullish bets, on AMC. But for the most part, guys, if you see AMC with this kind of data indicating we are going we're actually seeing a lot of these calls going into the money, then this is a gamma squeeze. You would think the same thing if this was any other stock and we had the same action. Guys, in last week, we only had about 15,000 calls that were in the money. Now we're seeing 104 almost 105,000 calls that are currently in the money. Out of the money calls as well are going up almost at 300,000. So we have about 401,000 calls expiring this Friday. Some of these are going to expire in the money, some are going to expire out of the money, depending on how high this gamma squeeze does go. We could see quite a bit of these options run into the money and see even more hedging that is going to happen. Now, as far as the puts, guys, I always like to acknowledge the puts as well, because this can also play a role when it does come down to obviously shorting the stock on the downside when these puts start to run in the money, but also on a lot of these puts that go out of the money, that can free up a lot of collateral, and you could see an increase in buying power going into the stock as well. So for in the money puts, you're looking at almost 42,000. For out of the money puts, you're looking at 286,000. So definitely a large amount right there, but most of these puts are concentrated between the $25 and the $20 strikes. So you're gonna have to see pretty much an unrealistic move to the downside to see a lot of shorting coming in from the market makers that are behind these options. So definitely a bullish thing as far as the option chain, and we are 100% going through a gamma squeeze. Now let's take a look at specifically how we know this is a gamma squeeze and why this is so much different from any other weeks we had a potential to go through a gamma squeeze. So when we started yesterday, we were at about $33 and some change, and that controlled about 5,500 contracts. At the $34 strike, 14,000 contracts. At the $35 strike, 23,000 contracts. At the $36 strike, almost 12,000 contracts. At the $37 strike, that is 13,000 contracts. So right here, you're controlling about 5 million shares. Now, some of these have obviously been hedged for, but some of these may not have been hedged for depending on the premium that you were actually paying. So if you bought this $35 call, right? You're paying, the last price is $3. Technically, you wouldn't have to see any hedging going on until your break even on this. And if you bought this right now, this is simple math. So it would be $38 would be your break even. So that is really where you'd see a lot of hedging. So when we continue to go up, it's not as if all of these contracts are being hedged all at once. Some of these are obviously being hedged immediately, depending who the market maker is, what kind of risk portfolio they are trying to manage. But most of these are going to be hedged closer to the end of the week. So I do think the rest of this week is going to be very bullish just because we've had so many contracts running into the money. We also have a ton of contracts that are just out of the money. At the $38 strike, guys, you're seeing almost 13,000 for open interest. At the $39 strike, you're seeing almost 7,400 for open interest. And at the $40 strike, you're seeing 35, almost 36,000 calls that are held in people's brokerage accounts. So you're going to see a lot of buying coming in from the market makers that typically control about 90% of the back end of options contracts. So that is a ton of shares that will have to be bought, obviously driving up the stock. And really $40 is where I am looking for. That is my target by the end of the week. That's only a $3 move from here. So that is about another 7 or 8% move if my math is correct from where we do currently sit. So definitely not off the table. Wouldn't be surprised though if we do have a down day tomorrow. It would not surprise me. We've had 4 consecutive green days in a row. If we can have a red day tomorrow and then close out the rest of Thursday and Friday on green days, then we'll probably hit this $40 strike. And a lot of these premiums are cheaper, so you're going to see a lot more hedging going on around $40. So that is basically the overall concept here, guys. There is a gamma squeeze going on. If you don't think so, then I would read up on stocks that are not AMC that go through gamma squeeze, what a typical gamma squeeze is, because this is textbook gamma squeeze, what is going on here with AMC. Now let's get into the share utilization. Now this is obviously a bit of my opinion here because like I said, there is pros and cons to this. Now if you see the share utilization going down, that means there's more available shares to be sold short or lent out to be sold short, meaning the short interest can go up even more. So in my opinion, guys, the 2 things that really matter, or 3 things I should say, with the AMC short squeeze overall is, are apes holding on to their positions? Are they buying more? Are there available shares to be sold short? And is the overall sentiment still bullish with the stock? And all three of those definitely are the case. But that is only my opinion. That is in my head. That is why I like to see the share utilization coming down as the short interest is going up, which we have been seeing. But on the other end, if the share utilization does go up, that means obviously the opposite of more shares being able to be lent out. So there would be less shares available to be lent out, which you can get this forced recall situation that does happen. But that is less likely than seeing the actual short interest just keep going up, which you do want to see. But you can see forced share recalls. You're going to be looking at about 98 to 100% share utilization before that does happen. So I think it's highly unlikely that we are going to see that, given the cost to borrow is still so low and it's not going up as much. So that is definitely uh, right here. This looks like a very bullish thing. Let me know. I really want your guys' opinions down below in the comment section. I think if the short interest continues to go up to those crazy levels, that'll obviously create more enthusiasm with apes, with news outlets. People are going to start talking about this to even more people. Imagine when we get over 20-25% short interest, you're going to be looking at a big can of worms the hedge funds and institutions are opening for themselves. So that is basically my thoughts here. Just a rundown though. The current short interest percentage of free flow is at 19.93 or 17.93%. Excuse me. Return shares 6.83 million. Borrowed shares 2.09 million. Borrowed change of negative 4.74 million. That's not necessarily shares that were actually covered. That is coming out the free flow on loan, which in yesterday's video that was at 22%, a little bit over 22%. So you see that went down about 0.5%. So definitely some shares are being returned, not necessarily covered. So that is going to do it for this video, guys. If you like my opinions on this, make sure to drop that like on the video, comment down below, subscribe to the channel, and turn on that notification bell. Make sure to let me know what you guys think about the share utilization situation. Would you rather have the share utilization coming down as the short interest goes up? Because that is the only way the short interest can go up, is if there is more shares actually available to be lent out. Or do you want to see the share utilization continue to go up, less short interest, but a higher probability of seeing forced recalls? I think the choice is clear in my opinion, but let me know down below in the comment section what your guys' opinion is. Also, check out the links while you're down there in the description. There is a link for public up to $70 in your choice free stock. It only takes about 3 minutes time to receive your free stock. No need to link a bank account or deposit a single dollar. They also do not use payment for order flow whatsoever. I personally use them and love that brokerage. Also, check out the link down below for the buy and sell alerts. It literally pays for itself. Join a private community where we send out alerts for all of the day trades, swing trades, and long-term investments that we make in real time. So definitely check those links out. That is going to do it for this video. I will see you guys in the next one.